Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Not a whole lot of economic data this week. It's actually going to be a pretty light week for until we get to like Thursday and Friday. We have some decent economic data later on in the week with the crude oil inventories coming out on, I believe it's on Wednesday, Thursday. Then we get some CPI numbers, GDP, and then on Friday we get producer price or personal consumption expenditures and core durable goods orders, which is going to be a good one to give us a bit of an indication as the overall robustness in the economy, personal income, personal spending, things of that nature. But that doesn't come until later in the week. Until then, we're going to have to rely on the markets to give us a little bit of direction. And having said that, without further ado, let's get on with the economic data that we did get today, which was the NAHB, National Association of Home Builders Index, came in at 74, slightly higher than the expected 70, and they revised last month's number down slightly from 70 to 69. So decent number there anyway for the housing outlook. But on to crude oil futures, coming off just slightly today, down by about 30 some cents. People were talking last week that crude oil was going to crash. I don't necessarily see that, especially with the overall strength in the economy we're seeing. Gold futures moving higher today, despite the fact that we're also seeing the equities higher for the most part, but gold futures moving higher. And I did add a trade in GLD to take advantage of this really low implied volatility. This isn't a very good chart of it, but because of that one spike in there. But it does have really low implied volatility right now, so I'm taking advantage of that. On to Bitcoin futures. Only talking about this, I'm not really trading this, to be quite honest, but you can see overnight did trade up into that 20,000 mark, which is probably a pretty strong. I don't think it's ever traded 20,000, especially in the cash, but it has since come off, but still up $700, trading very close to the 19 handle, but that was an overnight trade right off the open. Then into the bonds, we've got the bonds coming off almost by a full point today. Looks like it's kind of topping out, of course, a day after my TLT trade expired worthless. Remember that long put spread, the 128, 123 put spread I put on in there did expire worthless, so I don't have that one on anymore. But now, of course, looking like it wants to turn around, especially with Friday's top and then today's confirmation to the downside. We could actually start seeing that move down now. VIX coming off as we would expect with the overall equities moving higher. We can see here with the Dow Jones up over 172 points, creating a new all-time historical high. And same situation with the NASDAQ. NASDAQ up almost 40 points right now. And again, very close to the highs of the day. As you can see, we're just a couple of points off of that. But market really strong today. And mirroring that is the E-mini S&Ps up 14 points on the day and looking to test that 27 handle of the E-mini S&Ps, just a couple of points away from that now. This is the daily chart of the E-mini S&P on a 30-minute candlestick. So this is what we've seen overnight and into today. And as you can see, we are very close to the highs of the day right now. Just a couple of blips away, maybe 1 point. Market very strong today. Seems like a lot of euphoria going into the overall equities. So having said that, on to a couple of trades that I've added. With Verizon moving higher, I still have on a short puts in my margin account. In my IRA, I decided to add some short deltas by selling a call spread in there in the Verizon, in line with my rules, trying to define this short synthetic short call kind of scenario where I'm selling the calls and then going pretty high to buy the first strike I can for a nickel to define that risk just to meet it, make it IRA legal, if you will. So I went in there and did the January, sold the 55 calls and then bought the 59 calls to define that risk to make it legal and collected 29 cents. So pretty close to my rules on that. 55 strike being above the 52-week high. It's had such a massive run here. I think that it's going to kind of stall out. We're going to start seeing a little bit of profit taking going on. It's a clean month, so I should be able to take advantage of that high implied volatility. The short puts are doing very well, very close to even being able to cover those in my margin account, but I haven't done that yet. But now I've got two counter-opposing, kind of like an iron condor on, in a sense. Then on into GLD. This is the trade that I added in my margin account, right in line with my rules that I talked about in Friday's webinar on the long puts. So I'm bearish in GLD. I think it's going to have a turn rollover, especially with the Bitcoin doing as well as it is. I think a lot of people are going to be playing in that, not necessarily in gold, maybe even pulling money out of gold and throwing it into these Bitcoins. So I think that we're going to see a little bit of a sector rotation, if you will, or at least an asset rotation, as that is the flavor of the month, if you will. So I think that gold's going to kind of have a tendency to want to roll over here just a little bit. So I bought in some March, went pretty far out, so I don't have to worry about that theta component where I'm going to see that really come off rather dramatically, where theta is the thief in the night that comes and steals our premiums. I think that that is going to hold off a little bit because I got so far away, and I bought the 118 puts in there for $1.32. So I'd like to see gold come back down, maybe even test this value area low, and I'll be able to get out of that rather quickly in line with my rules for that particular trade. It might even, if it comes down to 118 really quickly, that's where I'm going to be looking to cover it. Otherwise, my real target is right down here at 116. So it goes down, touches 116.17, that's where I'm going to be getting out. All right, UPS. It's come up against this 23 fib level. I think that that's going to act as a little bit of resistance when you use this high implied volatility environment to take advantage of some good premiums in there. And I was able to sell those January 125 calls for 64 cents. So that's right around that 16. I think it was actually like an 18 delta when I was selling those. That in line with my rules for short selling calls in a margin account. So followed along with that as well. That's going to add some short deltas, getting a little bit long deltas in my portfolio. So I wanted to add some short deltas to that margin account. As with AT&T, ticker symbol T here, I went into the January and sold the 40 calls for 27 cents. Kind of chased that because it looks like it's topping out. Really liked kind of getting into a short scenario with this. It's still pretty bearish, so went into that as it's been overbought. It's made this little bit of a run. I think there's going to be some profit taking going on. We'll see a little bit of a rollover, and I'll be able to get out of that one relatively quickly. That's about it. Oh, and then finally, sorry, one other one, and I talked about Verizon in my other account. So that one taken care of. GLD, UPS, AT&T, Verizon are the ones that I have added today. That's about all I've done. I haven't taken anything else off other than letting those TLT long put spreads expire worthless. So that being said, Friday's webinar is going to be on the long put spread. So if you've missed that, I'm going to show you all the rules as to how to set up a long put spread to increase your probability of success. Now that I have TLT beating me on those probabilities, now we're setting ourselves up for success because future probabilities will be in our favor, correct? Well, we'll see about that. We'll try and talk about that in that webinar. So go to protraderstrategies.com, sign up for that. And if you missed the one on the long puts, especially if you're a newer trader, check that one out before watching this long put spread, because we're going to tie all this stuff in together, all right? So if you can't take that, take it easy.